Good morning, traders. It's Thursday, July 25th. Taking a look at the charts, 8:30 just passed. A little bit of economic news moving the markets a bit. If we take a look at the equities market, this is the SP500. All we're looking at here is the 8:30, the short-term time frame. In the last half an hour or so, we've seen the markets have a little bit of a pop and move up. And we're seeing the flip side in other things. If we take a look at gold, gold had a pop and is dropping. So obviously a little shake up here this morning, but let's go back and just look at the daily charts here and get a better feel. So here we are back at the SP500. Obviously we've had a nice pullback down to the 20-day. We got oversold, we got long. Now we're starting to extend to the upside, and we're starting to get a little bit overdone to the upside, but we are breaking out to some new highs. If we take a look at this short-term analysis chart here, you can see I drew on the charts the other day this kind of short-term resistance area right across these highs here. And more or less the market, if it was to start to break this W bottom, this formation right here, we could start to see a pretty significant pop and breakout. Obviously, if we break this high over here, which the market, you actually can't see it in the chart here. Let me move the chart over a bit. This high right over here is where we closed at. This is kind of in the all-time high, and the market more or less today moving higher, gapping to the upside, and we'll see if we start to see some more expansion and some big short covering today kick into high gear. Overall, we hit our first target yesterday, and the market's rallied up, and now our stop was down at our entry point, which is in this green area, and we'll be looking for it to continue to go higher in our stop. Eventually, hopefully we'll be able to raise our stop and reduce our potential downside risk if things roll over. But equities continuing to march higher. If we take a look over at bonds, bonds are actually moving higher as well. We're seeing, I think people are getting a little worried that the market's going to start to roll over, and money's been moving into bonds. And bonds have got a nice little pattern here. If we take a look, just using Fibonacci extension, we can go from this low up to this recent high and down to this low yesterday and carry it forward. It shows you where we could easily see bonds move to. So we've had the rally, whoops, wrong tool. We've had the rally, the pullback, and here we are at the 618, getting a little bit of a pullback off it this morning, which is good. Usually if you get a pullback off right off the 618, it usually means you're going to see the 100% measured move target get hit. And of course it is previous significant high on the chart, carrying that line straight across. You can see it acted as a significant pivot here, and then it had a 2-day pivot there. So overall, money continuing to slowly rotate into bonds, and as it tries to build another platform. If we look at bonds and go back in time here, we've seen several stages here where we've kind of kicked into high gear. We've had a rally, multi-month consolidation. We did poke to new highs, have a couple month consolidation. We've poked to new highs. It's actually still grinding higher here, and now it's more or less in a consolidation phase. So overall, we can expect sometimes several months, 2-3 months of consolidation. We've got 2 months over here from where it broke out, 2.5 months over here. And if we look at this current high, we're maybe a month in, so there's still quite some time for this to continue to mature, build another launch pad before pushing up to some new highs. But short-term bias, it does look like it wants to go up and test these highs again and maybe trade sideways in this formation. Taking a look over at, let's pull up crude. Crude having a pop this morning. Yesterday it sold off really nicely, moving down. Let's just look into this chart here. More or less it's forming what looks to be a bear flag, very similar to over here. And today we see it's starting to pop in early morning. But if we actually pull up let me pull up this, squish in this chart here. Take a look at how crude's been moving as it's sold down. This is going back to July 11th. So we're going back quite a ways here, but you can see the pattern intraday wise. This is full 24-hour trading chart. You get a drop, and then it kind of trades sideways in pre-market, after hours, hooks up near the end, and then crashes during regular trading hours. It does the same thing, rallies up, crashes during regular trading hours, overnight trading, pre-market, rallies, hooks up, and then crashes in regular trading hours. And now we're in this much larger phase here of the market. And here we are yesterday. It sold down on heavy volume, and here we are creeping in after hours. Pre-market is hooking up to the upside, and hopefully we're going to see this continue to play out as a large bear flag. And again, a big bear flag would take us down to the 50 mark, so quite a ways from where we are right now. And we're just hoping this is going to continue to get sold into. The major pattern here, bear flag pointing to the downside, and we've got another one of these kind of drops and these early morning hooks before big volume steps in and sells off. Let's take a quick look over at precious metals this morning. Gold was up a little bit more. Obviously, a little bit of news hit the market. We saw it pull back real quick, but still flirting in this kind of sideways in the upper end of this range. It's really holding its ground. There's a lot of accumulation going on in terms of no one's letting it really drop. Typically, the market's going to want to try and run some of these stops. And the more stops it puts in, the stronger that level will be when it starts to sell off. So at this point, we're going to have a tight little stop here. Not us as a stop, but traders in general that are chasing prices in. They're going to have a stop here. There's going to be another stop on this pivot low. And there will be another stop down here on this pivot low. The closer stops are together, the bigger the flush and the run of selling you can get. So the market, as it starts to break down, once it breaks this level, all the people piling in who have moved their stops up to under this is going to create a stop order, a trigger. It's going to create extra selling in the market. And the closer they are, sometimes one wave of selling can trigger the next wave of selling and trigger the next wave of selling, and you get a big washout and a big panic low, and the market kind of reacts, and then it can stabilize from there and go higher. And that's how you get these kind of shakeouts where it's just a huge drop just before it takes off. The market likes to do that. So you got to be aware that as we build all these little stops and they get closer together, the market likes to run these. Taking a look over at the US dollar index, I'm going to actually pull up the FinViz chart again. Here is the FinViz chart of the dollar index, and you can see another nice update today, gunning towards that 98. I think there is potential for it to continue to go higher, but overall, gunning up towards this 98. The rising dollar, keeping I think a little bit of a wraps on the precious metals. Eventually, when the dollar trades sideways or starts to pull back, we're going to see metals really take off, because the metals are holding their ground and actually really still moving up with the dollar. So when the dollar does start to soften, we're definitely going to see precious metals take off and probably not look back for quite a while. Last but not least, let's take a quick look over at the Russell 2000. Russell 2000 had a nice pop there yesterday. It had been underperforming, forming this large bull flag, and it had a really strong pop yesterday. It's trading up into this resistance zone, this previous high, and through all this congestion over here and over here. Overall, again, markets are still in an uptrend, and we aren't looking to short the markets yet. We need a lot of work to be done before we're looking to really short the markets for a bear market. But at this point, we're still buying the dips and going to be selling into the rips, just like we did with SSO yesterday. We got in oversold. Yesterday it popped and rallied. We got our 2.4% on the first portion of it. We're going to see if the equities continues to move higher. Small caps, I would say most of this move is likely done. We can throw a Fibonacci extension on there. We can go from this low to this high, down to this low. You can see the upside potential here if it can muscle up the power. So we've got the rally, we've got the pullback, we're at the 618 here, which is resistance. If it can make it up to this level, it's going to be right into these previous highs. And if it does get up there, that market will definitely probably be overbought, and we'll probably see some type of pullback, because it's going to act as a pretty significant resistance zone. So that's where we are in the grand scheme of things. First target on the Russell 2000 using Fibonacci is at this previous high, and we'll see where it goes from there. But overall, the main index that we're following here for trading is the SP500, which we're rallying up, and I think we're getting into the late stages here. Eventually, we're going to have a sharp pullback, but at this point, we got to continue to play with the trend. That's it for now. Talk to you in a bit. Bye-bye.